Hello everybody, here. If you have ever asked questions as to who is that, when is that, how is that, how did that happen, I could tell you that you have interest in auditing, and everyone, one way or the other, has actually asked such a question or give answer to such a question at different times in life. So we want to actually revise auditing, be it advanced auditing, be it on the professional level, be it on the skill level, be it that you just have interest in audit, because the truth of the matter is everybody audits at one level or at one point in life or the other. Though we are talking about auditing now as a course, as a subject, but if you're a lover of auditing and you want to know what is going on around your business, around your environment, then this video is for you. Those that are writing examinations, advanced audits, or at the skill level, this is a revision class also for you. And key terms, many times when people are answering audit questions, a lot of people fail because key terminologies were not nailed. We need to nail it to show the examiner that we actually understand. So we are welcoming you to GJ's Associate channel. We are going to do it from A to Z. This video is going to be explanatory video from A to Z. I'm not too sure we can finish A to Z of key terminologies of audit because it's so broad, but to a greater extent that we can, if I perceive that this video may be that long, we may need to ask and start another video or another episode and turn it into a series. But so far we are going to start and see how far we can go. First of all, let's start by saying what is an emphasis of matter, and I'm going to be snapshotting it. And please, if you are yet to subscribe, please subscribe to GJ's Associate channel and click all as notification, so that anytime we upload new video you can always receive the alert. And if you have any question as we continue now or any previous video, please, the email is there, you can reach out to us. So emphasis of matter, when we are talking about emphasis of matter, what do we mean? An auditor actually will put an emphasis of matter out on the audit reports when, let me quickly write emphasis of matter. That is what we are dealing with now. An auditor puts out emphasis of matter on his reports when we observe that there is a particular event, or there is one thing or the other that we believe that the user of information should know about. So an emphasis of matter is to call the attention of user of information to that particular thing, the event in the course of that audit assignment. So that is an emphasis of matter. It's a paragraph that compel or shows the user of information or calls their attention to a particular event that auditors in their judgment believe is actually important for them to know. So we'll say that that is an emphasis of matter. So what about joint audit? Joint audit. When we are talking about a joint audit, what do we really mean? When we are talking about joint audit, we are talking about a situation or an audit procedure in which more than one auditor is involved in execution of that audit. So we cannot be talking about joint audits when a singular audit firm is engaged. So when we are talking about joint audit, it simply shows and indicates that at least two or more audit firms are engaged on that assignment. And you know what? they are jointly liable to the opinion they are giving out to the public as regards that audit. So we say they are jointly liable. So it's important for joint auditor to manage the execution very well, because other firms will not be exonerated from the consequence of their audit opinion that they've expressed, whether or not they were involved in that particular aspect of the audit process. Audit as a process, so is segmented because they are jointly auditing it. An audit firm can take, let's say, part A, and auditor B takes part B of the audit assignment. They come together to express a singular opinion. Now let's say auditor that take part A of the assignment, is what I'm saying now is will be liable as though they are actually the one that takes part A and part B joined together. They can't come out to the public and be telling us that no, it's only part A. This where the issue comes from, we do not know anything about it. There's nothing like that in joint audit. They are both jointly accountable for it. So that is about joint audit. Let us look at what management expert is. Who is a management expert? When we're talking about management experts, we are talking about, I think first of all we should say, who is an expert? An expert is a professional in his or her own right who has been licensed or certificated by a body of knowledge to carry out one thing or the other in this our business world or our environment. So an expert could be an actuarian, could be a surveyor, an expert could be a firefighter and the like. Okay, so now when we are talking about management experts, we are talking about an expert that management engaged. And just as we have management experts, we can equally have auditors experts. So please, for the purposes of examinations, know that an expert is what a person that has been licensed and authorized to do one thing or the other. Then who engages who is what would let us know whether an expert is a management expert or an auditor's expert. Please don't forget this. So therefore, a management expert is engaged by the management of an organization, just like the auditor's expert is engaged primarily by the auditor to carry out one aspect of the audit process or the other. So that is management experts. Let us talk about a prospectus. A prospectus. We often heard about prospectus, especially when it involves sales or acquisition of an organization, when an organization is exchanging hands. And not quite long we did a video on Nigeria Stock Exchange, Security Exchange Commission and the like. So a prospectus comes in this regards, and a prospectus actually is a financial statement too, but for a particular purpose. So it has information like a memorandum offering the share of an organization or the debenture or whatever they want to sell to the public for subscription or for sales. So that is a prospectus. A prospectus is a financial statement that is purposefully written for the purpose of buying or selling of shares, debenture, or any form of security of an organization. Let us move on to some of the other definition. What is an APM? An APM actually simply means Audit Planning Memorandum. Audit Planning Memorandum. And Audit Planning Memorandum is important for the planning and successful execution of an audit. Audit planning memorandum is a tool of communication, just as we have external tool of communication like auditors report to the public. An audit planning memorandum is an internal medium of communication to the auditors. So an APM is used to communicate about our knowledge and planning that we've undertaken in execution of an audit process or an audit engagement and assignment. An audit, we usually have a team members which we go out or be responsible for a particular audit. So the way they communicate to one another is using an APM. So an audit planning memorandum communicates to the team of auditors what we know about the client that is going to be audited, how we are going to audit them, the deadlines. Now I'm beginning to mention some of the things that must be in an APM. The deadline that we've agreed for the audit to be executed, the date of submission, the date of signing. It equally communicates those who are going to be member of the team, like the engagement partner, the audit manager, the audit supervisor, the audit trainees that are going to be part of the team for the audit execution. So an audit planning memorandum must be written and documented at the planning stage of an audit. And also at the execution is important, we refer to an APM, and even at the closure we need to refer to an APM too, because we need to go back to an APM to know whether everything has been executed and we actually find and we've actually met the requirements as planned and executed. So we can use an APM to control our audit work after we've executed it. Okay, let us move on to another one. Let's talk about an audit evidence. Audit evidence. Audit evidence. What is an audit evidence? Are you trying to answer it? That's great. Please, you can put it in the comment below. An audit evidence basically is, should I say anything? Information gathered in the course of an audit for the purpose of expression of an independent opinion will stand as an audit evidence. So now audit evidence can be in soft copy and can be in hard copy. Audit evidence can be in soft copy and can be in hard copy. It's still an audit evidence. Of course, there are qualities that audit evidence must have, like it must be time bound, and audit evidence must be sufficient, must be appropriate for it to stand as audit evidence, must be able to stand the test of time. It must be authenticated. So all information used and gathered by the auditor in arriving at their opinion and conclusion and making an audit opinion is what? An audit evidence. So what is an audit expectation gap? Audit expectation gap. When we are talking about audit expectation gap, we are talking about the knowledge gap between the thing that auditor believes that he or she should execute in his assignment and what the audit clients expected of him or her or of the firm of chartered accountants. So an audit expectation gap is the lacuna between what we auditors are guided to do by audit framework, international financial reporting standard, international auditing standard, and so many other frameworks, and what our audit clients thought we should deliver. And primarily, audit expectation gap we arise as a result of knowledge gap. Therefore, one of the reasons or one of the things to do to close expectation gap too is to educate our clients about the deliverables of our audit assignment. And we just spoke about audit planning memorandum. We must communicate to our clients as we are engaging them. Let them know what audit is, what auditors will be done, what we should not expect from the auditor. Like, let me give you an example of what could be an expectation gap. Almost all clients expect fraud to be detected. But you will agree with me, as much as fraud is not good and will bring any organization down, it is not the primary purpose of an audit assignment. The primary purpose of an audit assignment is to express an opinion as to the truthfulness and the fair presentation of the financial statement. End of quote. That does not exonerate an auditor from detecting fraud, but it is secondary. But to an audit client, they could make it a primary assignment. So if fraud is not eventually detected, it's assumed that the auditor has not done their work. So this is a major expectation gap, and could only find a closure when we communicate to them, even from the onset, the purpose of an audit and what the management is responsible for. Management actually is responsible for the closure of expectation gap as regards fraud. Management should put strong internal control measure in place that can easily detect and debar fraud from happening. Of course, auditor too, in the course of our work, propose some internal control processes that could help our clients to achieve this. But we should try as much as possible not to major on minor or minor on major. Okay, let's move on to another thing that we can talk about when we are talking about definition of key terms of audits. Let's talk about continuous audit. Continuous audit. What is a continuous audit? When we're talking about continuous audit, is actually a type of audit that is rolling. And you know what now? With the advent of technology, audits now is more or less continuous. Hello everybody, Benga Latunji here. Welcome to the revision on auditing. We'll be looking at key definition of terms and how I'll be explaining it, and it's going to be in the form of revision, and we'll be looking at audit program, what audit report is, what audit risk is, what audit planning is, what's an audit trail, audit working paper, and auditing standard are going to be covered in this episode on the series of auditing revision of definition of key terms and explanation. And I would like you to do one thing for me: click subscribe button to encourage us here, and two, to always receive alert when we upload new videos. Okay, then when you click all notifications so that you can be alerted anytime we do. Without wasting time, what's an audit program? If you remember the first episode, we dealt with APM, Audit Planning Memorandum. If you need to check it up, please go and check it up. We had dealt with Audit Evidence. We had summarized what audit expectation gap is. We had summarized what and joint audit, and some more that I may not be able to pinpoint right away now, so you can check them up. But now we want to look at Audit Program, Audit Report, Audit Risk, Audit Sampling, Audit Software, Audit Trail, Audit Working Paper, and last but not the least, we'll be covering auditing standard. So when we are talking about Audit Program, we are talking about the guide for the auditors that are going to be on the field to work with. So an audit program is a list of what the audit supervisors and audit engagement partners had worked out on critical areas of the assignments that they will want the audit team to work on and report back to the office as consigning. So these are what we call program. Some of them are checklists, some of them are to obtain one evidence or the other, some of them are to make inquiry. Do you still remember audit procedures? Okay, please. Audit procedures are contained in audit program on what we want to do and how to go about an audit execution and audit engagement. So basically it's a list of instruction that must be adhered to on the field. Sometimes we can say, okay, audit program or audit programming has advantages or disadvantages. Of course, yes, but the truth of the matter is audit program is not cast in stone. Don't forget, it's a guide, because one of the disadvantages which may come in the exams is, okay, what are the disadvantages? And you say it's stifle the initiative out of audit trainees or people on the field, because it's already giving them what to do and what not to do. But truly it's not that accurate argument, because why is a guide, why audit program is a guide? If there are reasons on the field that the people on the field observe that changes had occurred, they could discuss it with the supervisors or other responsible officers ahead of them, so that they can reason along and modify the audit program. Okay, so that is about audit program. Let's move on to audit report. Audit reports. As professionals, anything we do, carry on, or engage in actually should have a means of communication or writing it down somewhere for posterity. So therefore, audit is not an exemption to the rule of professionalism. In fact, core audits wants us to report back. we should report back on every engagement, and this is what we called audit report. So it's the end product and the final product of an audit assignment, and the auditor issues to the member of the client's office or users of information, expressing our opinion about the truth and fairness of the audits that we've carried out of the financial statement. So that is audit report. Let me quickly write it, audit reports, as we continue. So audit reports simply is to communicate what we've done to the people that engaged us, to the organization that engaged us, and to let them know whether the financial statement actually presented to us is fair in presentation and is true. That is basically what an audit report should communicate, among many other things. Don't forget that the first episode we dealt with, we talked about an emphasis of matter as a paragraph inside an audit report. So if there is need to have an emphasis paragraph in our reports, please, as auditors, go ahead and put an emphasis page on your report. So many other things could be on audit reports, but this is one of it. And every audit report must clearly state the truthfulness and the fair presentation of the financial statement presented to us. Let us move to audit risk. What is an audit risk? When we are talking about risk, like they used to say, it's risky not to take a risk. So audits has risks in it, and audit risk could be detection risk, audit risk could be control risk, audit risk, inherent risk. So those are basically the three types of audit risk that we can have, and it is risky in audit if the audit evidence is not appropriate or is not sufficient. So that will arise at the end of the day to what we call as detection risk, that is inability of the audit procedure or processes to detect what it ought to detect. The control risk simply means that inability of the procedures and processes put in place by the management to detect or debar fraud from occurring, or to control what it is in existence to have achieved. An inherent risk is the risk in the business. It's a business risk that is associated with the nature of business, and we cannot dissociate from an inherent risk. So these are types of audit risk, and auditor must prepare themselves to be able to address all these risks and to ensure that they do not have greater impact on the truthfulness, fair presentation, and on the audit opinion that we are going to express, so that we will not express wrongly. Because if audit risk is in existence, to the extent to which audit risk is in existence is to that same extent that wrong opinion could be made. So auditor need to be careful and process risk very well, and put audit program to manage audit risk in place as we continue to execute. So therefore, what we are saying in essence is that audit risk is the risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. So we need to be careful and guide ourselves by using our audit program to ensure that risks are detected and we are able to actually communicate adequately on the risk observed and how to mitigate it and guide our opinion as well. So let us talk about audit sampling. Audit sampling. In audit, basically we sample a lot. Why do we sample? Let's take it from what is a sample. Basically, a sample is a part of a whole. So a sample is taken from the population. I want to believe we still remember our statistic days. Yes, a statistic is the mathematics conducted on the whole population of the samples that represent the population. So samples are taken from the population, and when we sample the result we get, and when we test it, we say we are carrying out statistics. So an audit is not an exception to sampling too, because of the volume of work that the client has carried out during the year under review. So as auditor, for us not to waste too much time, for time not to be consumed for monetary consideration on the part of the client and ourselves, and so many other resources that must be put into audit execution, sampling majority of the time is inevitable. But when we sample too, we must be very careful to ensure that our sample represents the population, and that leads us to different types of sampling. Like we have stratified sampling, we have haphazard sampling, we have a lot of other samplings that I may not be able to pinpoint right now. This is to ensure that we use the right sampling technique so that we will not be misguided by the information that we will arrive at after the whole audit sampling has been processed. Because on the sample of work done, audit tests are going to be conducted, and the resultant effects of the tests carried out on the sample taken from business process of our clients, we are going to form an opinion, expression of opinion, whether the whole transaction, whether the whole financial statement is true, fairly presented or not. So we see why we conduct audit sampling now, and why we must ensure that we use the right type of sampling technique so that we will not go into error by the time we are expressing our audit opinion. Audit software. Software is all over in every sector of the economy. Now when we are talking about audit software, we are talking about those programs that are audit specific, that helps in achieving our audit work. So audit software is a program that is helping the auditors to achieve or execute audit work. Basically, they are used on substantive testing procedure of audit. So audit softwares are programs used in carrying out our audit work. So what's an audit trail? The next one we are moving on is Audit Trail. When we are talking about trail, we are talking about something that leaves a footprint. We're talking about something that is elongated. Likewise, an audit trail. That is like the pictorial for depiction of audit trail. Audit trail, we are talking about the transaction being examined, leaving the footprint. That is, if we are to audit Z, for example, now, before we can arrive at Z, we must have encountered A, B, C, D, E. So the trail of letter Z is A, B, C, D to Z. Just to a simple analogy for an audit trail. So likewise, when we are talking about audit trail, we are talking about footprint that facilitates audits, individual audit transaction. So audit trail helps gathering of evidence and authenticates evidence that we've gathered also. Let me give us an example of an audit trail. As somebody came to buy in a company and eventually purchased it. For an audit trail now, it starts from the inquiry the customer made to how the person was welcomed, to the pro forma invoice, to issuing of receipt, to packaging of products or rendering of services. That is a trail. So when we are auditing that sales now, we are not just going to jump at the sales figure and say that we've conducted an audit. No, there must be a checklist of audit process in which we want to ensure that the price is what the organization wants to actually sell. We want to ensure that the requisition that the client, now the customer, made, that this is what I want to buy in your organization, was what was actually given to him or her at the end of the day. We want to be sure that the quantity requested for was what was sold and packaged and dispatched, and that the total amount collected was accurate. That is following an audit trail. So when we mean an audit trail, we are talking about the beginning to the end of a particular transaction being examined. Let us move on to audit working paper. Let me quickly put it out. When we're talking about audit working paper, we are talking about what the auditor used to document his or her work on the field. It is important for me to say this, especially in this jet age, that audit working paper now does not necessarily mean a physical document. An audit working paper now could be electronic working paper. So that being said, audit working paper has its character, its feature, before we can say this is a good audit working paper or audit work paper. Audit working paper must have, as a matter of fact and importance, the name of the clients we are using that paper for. Don't forget, when I mean paper, I mean both electronics and otherwise now, and physical. So the name of the clients must be on a good audit working paper. The date at which the work was conducted must be on a good audit working paper. Who performed what on the audit assignment must be, that is, the auditor's name or signature must be there. The aspect of audit that was carried out, the audit assignment, maybe is P or L that was carried out, or maybe a checklist of substantive tests on purchases, whatsoever we've carried out must be on that working paper. Of course, the name of the audit firm too, the audit working paper must carry it, and a lot of other features before we can say this is a good working paper. And at the end of the day, a good working paper, one of the qualities of a good working paper is equally that it must be signed and attested to by the person that had worked on it. So audit working paper comprises of documents, like I said, records and information, be it electronic or be it on the paper form. So auditor must have come across all this information in the course of his work, and all this working paper and information gathered is to one hand to ensure reasonable basis for the expression of our opinion on the financial statement. So that is working paper. And auditing standard. Auditing standard. When we are talking about auditing standard, we are talking about a whole lot of framework that guides the audit profession or audit industry. So auditing standards are localized and also international, like international auditing standard. And under international auditing standard by the International Auditing Standard Board has a lot of other standards under it. So it's a framework that guides internationally as auditor. Likewise, also we have local guides on how audits should be executed, and now we'll say it's a local auditing standard. So countries now that have not joined in auditing international auditing standard or international audit environments, we adhere to the local standard of auditing. Meanwhile, those that have joined, we adhere strictly to international auditing standard. And you know what? Under the framework of international auditing standard, when the local standard of auditing conflicts with the international auditing standard, the localized auditing standard primarily and first of all prevails. That means that as a standard and as a rule internationally, it is expected that if there is a conflict between the local auditing law and standard and the international standard on auditing, the local prevails. But now it does not end there. It is the responsibility of the local authority in the industry of auditing to liaise with those other international bodies to give reasons, especially if the local country is a member of the international body on auditing, to ensure that they let the international body know why do we have this difference and to what extent are we going to ensure alliance with the international auditing standard as soon as possible? So they must try as much as possible where lacuna exists to bridge the gap. First of all, when it was observed, localized one should be complied with, but the local authority on auditing should ensure they quickly, as a matter of urgency, complies with that of the international environment. So that is auditing standard, and we have myriad of auditing standard that guides the profession. So this is Benga Olatunji FCA speaking from G. James Associates. I will quickly recap all we've learnt in this video for the purpose of summary. And also we may need to go, which we are going to, the link we put it under the description, and also we will be able to see it as the end note if you watch throughout to the end. Those ones that we've dealt with, to quickly revise on auditing and your guaranteed sources. We've dealt with audit program, in which we said that audit program is a list of instruction to the audit team to ensure that they are able to carry out the execution of audit assignment without overlooking important areas of the audit assignment. We've spoken about audit report, in which will let us realize that professionalism demands from us that we should document our work done, and we should report back to those that engaged us, and using the vehicle and medium of audit reports, communicate back to the end user of our audited financial statement our opinion as to the truthfulness and fair presentation of the financial statement we had worked on. Audit risk had been discussed, in which will let us know that every audit has a risk, and business world is unique in itself, having risk. And we spoke about detection risk, we spoke about control risk, and we spoke about inherent risk. It is inherent in every business to have risk that could not be dissociated from it, and inherent risk cannot be run away from, we could only manage it. So that is inherent risk. Then we have detection risk, which is the risk that is 100% owned by the auditor, and is the risk that our audit procedures and process may not discover what it ought to discover, and this may lead us to wrong expression of opinion. So ultimately, auditor needs to be very careful and well guided when it comes to detection risk. Then the control risk is the third part of the audit risk, and we said that the control risk actually belongs to the management of the organization and ensuring there is an internal control in place. And internal control, don't forget, is the whole control system, which may be financial or otherwise, put in place by the management to ensure that the assets of the organization is or are not mismanaged. And when we are talking about the assets of an organization, we are talking about both financial, both human resources and otherwise. So that is control. Also, we had looked at audit sampling, and we said that a sample usually is taken from the population to represent the whole population as a result of time constraint, as a result of resources that we need to put in to get work done on 100%. Majority of the time in audit world, we do carry out sampling, and majority of the time audit is on sampling. Then we make our opinion. So therefore, if a sample is representing the whole population, it is important that the sampling technique should be accurate and be the best that could represent the population. So we made mention of sampling technique that it could be random sampling, it could be stratified random sampling, it could be hybrid of both. There are a lot of sampling technique that we've mentioned, and that is talking about or summarizing audit sampling. Then we'll talk about audit software, in which we talk about the written programs or instructions encoded for the purpose of audit execution. So we use audit software in audit industry, just like there are so many other software for different industry. We've spoken about Audit Trail, in which we said that every transaction must leave a trail. Alphabet Z leave a trail of ABC to hit. Likewise, if there's a sales, we are to audit a sales, the audit trail of a sales begins from when the person that want to buy, the customer, approach us and make an inquiry, to when pro forma invoice was given, to when receipt was given, to when the we package the goods or render the service, and even to the extent of customer satisfaction survey conducted on it. So those are trail of a singular transaction. So that is an audit trail in picture. So we talk about audit working paper also, in which we said that audit working paper could be in soft copy and it could be in hard copy. It simply means where we gather the information on the field and put them down, which may be in paper form, which may be electronically organized. So that is audit working paper. And we spoke about audit working paper, the quality of audit working paper, and one of it is that audit working paper must contain the name of the client being that engaged us. It must contain the name of the audit firm. It must contain the name of the person that worked on the working paper. It must contain adequately the date in which the work was done. Also, it must contain the year in which we are under review. The audit year under review must be there. It must be initialized, that is, the person working on it must have his or her signature on a good working paper, and many other quality of working paper that we would not mention. And all these things that we've said actually are in topics which we've done before. You can search on the James Associate channel and ensure that the keywords you are looking for, and you will find, like when we are talking about audit working paper and audit planning, APM, audit planning memorandum, you will all find them because we've done series of videos on them. Last but not the least, on this video we spoke about auditing standard, and we said that auditing standard are framework that guides auditors and the audit industry, which could be localized or on international basis. So an audit and a country that has joined the international body of auditing must adhere strictly to international auditing standard, while a few countries that are yet to join must ensure their local audit guide and framework are strictly adhered to. So auditing standard are simply guides that the industry has agreed on, that these are the ways we need to approach our work before we can give an independent expression of our opinion to our client onto whether the financial statements adequately represent clearly, truthfulness, and fair presentation, adhering to every important accounting guide, accounting principles, accounting standards, before we can give a clean slate of expression of opinion. If not, audits and auditor will need to qualify the opinion, and we talk about qualification of expression of our opinion in an audit report. Next, we are still on revision. We are going to be looking at some other aspects of auditing keywords, and we'll be explaining it. Like, we are going to be talking about contingencies. We are going to be looking about at continuous audits. We are going to be talking about control activity. We are going to be talking about control risk. We are going to be talking about control environments, and I want to believe you want to join us and learn more about all this control environment, control risk, control activity, contingency, control, continuous audit, and so many more as we revise together auditing, be it advanced audits, be it on the professional level, be it you are just a lover of auditing, or you are an entrepreneur that wants to put control and processes in place for your organization. From G. James Associate Channel, Benga Latunji is my name, FC here. I'd love that you subscribe to G. James Associate Channel, click the notification button. We are value to life, we are value to your businesses. Hello everybody, Benga Latunji here. Welcome to another revision session on auditing, be it advanced auditing, be it auditing and assurance, be it lover of auditing or entrepreneur that wants to know about control in his or businesses. Here's the place to be, and we'll be looking at key definitions, and I'm going to be explaining it on control risk, control environment, control activity, continuous audit, contingent consideration and contingency generally, comparative information, back duty investigation. Basically, we are going to cover these areas in this session under auditing and assurance. Basically, it's a revision to know and familiarize ourselves with definition of key terms in auditing, and also to be able to understand, for the purposes of examinations, keywords in questions and how to go about answering them. Without wasting time, what do we mean by back duty? When we hear back duty, and back duty does not necessarily actually limited to auditing. In financial world too, back duty is in taxation, back duty is there too. So generally, when we are talking about back duty investigation, we are talking about the ability of the tax agents and the authority they have to go back into years past and dig deep into activities and business dealings for the purposes of actually ensuring that the taxpayer pay the due to the government. So back duty may be in form of investigation, and that's why we call it back duty investigation. So basically, it's an instance of tax authority where there are maybe suspicion, or they are suspicious that taxpayers has not paid the due taxes, or wrongly assessed, and might have basis for investigation due to maybe incomplete records submitted to tax authority, or maybe they have a clue or the other that is pointing to tax not being fully paid and the like, inaccurate information supplied by the taxpayer to them. They may raise a back duty investigation to be conducted. So basically, that is back duty. Then comparative information. When we are talking about comparative information, basically IAS, I think IAS 1 dealt with it under financial presentation of financial information, financial statements. Basically, for every financial figure in the accounts is expected as a matter of accounting standard and principle, accounting standard, that there should be a comparative figure, which simply means that last year's figure or last quarter's figure, if it's a quarterly accounts we are rendering. So it simply means there should be another figure that we can compare what we are talking about now with. So that is comparative information, and it's a matter of accounting standard and auditing standard. So it's simply talking about amount and disclosure included in the financial statement in respect of one or more prior periods in accordance with the applicable financial reporting framework. So that is comparative information, and it's a matter of accounting and auditing standard. Contingency in accounting world, in business world, in auditing world, it simply means an unforeseen circumstance, an unforeseen event which most likely may be out of our control. That is what we are talking about when we are talking about contingency. So is a condition which exists probably at the balance sheet date, where the outcome will be confirmed only at a future foreseeable future time, and its occurrence or non-occurrence is uncertain. Its occurrence or non-occurrence is uncertain, and we can only ascertain it in the future time. So that is contingency. So that it's going to happen or it's not going to happen now may even reside out of our control. So we'll now be talking about contingent consideration and the like. Maybe we are into business dealing, maybe we want to sell a stake in our organization and the like, and the consideration, we could not completely say this will be the consideration and the like, but it's a form of obligation that we crystallize in the nearest future. Then we can talk about continuous audit, and nowadays basically audit is continuous, simply being that now we are in the technology world, in which, especially for organizations that are into sales of fast moving consumer goods, they need to imbibe or embed in their application. We've spoken about software too. Embed audits into their application, so that as sales and procurement are being made and as business activity continues, likewise also there is to a greater degree audit is being executed. That is continuous audit. So nowadays audit is rolling, that is examination of business activity is in cycle now. It continues, it doesn't stop, unlike before that we were talking about final audit and the like, interim audit. Audit majority of the time now is continuous. So when we're talking about continuous audits, it's an audit in which it involves all the year-round review of transaction and account balances. Let me give us an example. If we have an organization that is online, business operations basically is online, and customer request maybe for a purchase of certain items in our store, and we deliver. So our stock taking, our stock count now is more or less of a form of continuous audit, in which as we remove one or sell one from our stock, it immediately updates us that now you have to also balance in stock, so that we will not sell more than what we can easily give to clients or sell non-existing goods. So that is that is the effects or advantage of continuous audit there. So audit nowadays is continuous, especially for businesses that run online business. Another thing that we want to talk about here now is control activity. Control activity, which we can equally term controls or internal control. Basically, control activity could be electronic, could be financial, could be physical. So control activity, simply put, are efforts, procedures, processes that managers or management as a whole put in place to safeguard assets, to maximize our profitability, and to minimize fraud, and easy and earlier detection of fraud. That is control activity. So control activity actually belongs to the manager or the management to put control in place. And control activity could be in form of, I talk about physical. Let's say we put padlock, lock and key to access or deny access to a particular place. That is a control activity. So it helps ensure that management directives are carried out. Only people that need access to that particular place will have it. So it could be electronic. Maybe we have to log in. Maybe there's a thumb printing electronic that we need to clock in, to clock out, and the like. Those are control activities. But now is a type of electronic. So it could be physical, it could be physical, it could be electronic. But those are generally control activity. Who has responsibility for control, to put control activities in place? I'd mentioned it belongs to management, not the auditor. Control environment. Having spoken about control activity, control environment now is an attitude. Actually, when we're talking about control environment, is the totality of both the control environment, the control activities put in place, and the attitude of management towards anything control put in place by the organization. So it includes governance, it includes management function, it includes attitude, it includes awareness, it includes action of those charged with responsibility to govern the organization, to manage the organization, as it concerns internal control, as it concerns the importance of control to an entity. So therefore, if management style could be perceived to be lackadaisical, then we can say that the control environment is weak. But if at the slightest inclination of a manager thoroughly try to know all that has happened, then we can say the attitude of the management towards governance, towards control is very strong. Therefore, control environment is strong. So we can conclude that to the extent to which the organization's managers and management as a whole takes seriously control put in place, or controls put in place, to that extent is control environment going to be strong or is going to be weak. That is control environment. Control risk, therefore, having said that control activity, internal control belongs to managers and management as a responsibility or as responsibilities, then therefore control risk is the risk that is the inability of the control procedures, control processes, control activity, management attitude to controls put in place can, to the extent that it can not debar what actually it existed for. For example, a door has a lock. The function of it is, the objective of putting that door under lock and key is to deny access or give access to authorized users or those that need to have access into that space. But now, if for any reason an authorized person enters into that space, maybe a room or a workplace, then, and the lock could not deny him or her access, the keys could not deny him or her access, then we will be talking about control risk. So a control risk has taken place. A control risk has taken place. So a control risk is the risk that the mitigants, processes we've put in place, could not achieve desired aim and results. That is what we are talking about when we are talking about control risk. We've spoken about back duty, we've spoken about comparative information, contingency, we've spoken about continuous audit, control activity, control environment, control risk, and simply put, I'll quickly recap it. But before I recap it, after now, the next revision we are going to be looking at, we be dealing with corporate governance, what is cutoff procedure, detection risk, fair information, fair value. We'll be looking at forensic auditing, forensic investigation, and the like will be what we are going to be dealing with. So we've spoken about back duty. Back duty can date back to 6 years. Back duty investigation can date back to 6 years, and it is the responsibility and authority of the tax office to carry it out, having inclination of one error in inaccurate information submitted by the taxpayer or the other. Comparative information as a matter of IAS 1, which spoke about financial statement presentation, that every account should have a comparative figure. The only exception now in which an account may not have is when we are talking about a first year account or a first year audit. We now have it. Then we've spoken about continuous audits. It's a rolling audit in which all year round we keep auditing, and I gave example of an online transaction or online business. Now they must embed into their programs and softwares and application continuous auditing programs and instruction. Control activity has been looked at, and is the responsibility of the management to put control activity in place. It's the responsibility of the managers and the management to put control activities in place, processes and the like. Control environment, we said, is attitudinal, so it's the total attitude of the management, be it in form of attitude, in form of processes put in place, in form of activity, that is aftermath of the control, checking that the controls are working. This and many more are encompassed in control environment. So it's the total attitude of the management towards control put in place, to checking control to be effective, and everything that we can talk about control we make up control environment. It's like control environment is like housing control. Everything we put inside the house is control. Then the control environment is the building that actually houses the control. Last but not the least, we spoke about control risk, and we said that is the risk that the control, the processes, the procedures put in place by the managers are not able to achieve results or the intended results. Then we will say that control risk has taken place. So don't forget to join us next, so that we will be talking and we'll be looking at detection risk, fair value presentation, forensic auditing, and many more. Please click the subscription button. Ensure you click all notifications so that you receive from us alerts immediately we upload the next video, in which we are going to do not quite long now. And like, comment. If you have any questions, you can comment, and we are sure we are going to respond. Benga Olatunji FCA is my name, and I've been speaking this while from G James Associate Channel. We are value to life, we are value to your businesses.